What's up, guys? Today I'm going to be explaining what's actually going on when you see a fair value gap. I feel like everyone just learns that it's a three candlestick, move, but no matter how seasoned you get, a lot of us forget or never were taught what's actually going on behind the charts, what's actually going on from buyers and a seller's standpoint. Because at the end of the day, a chart is just people buying and people selling a particular good. No matter what you trade, it's all the same, right? A buyer moves the market up, a seller moves the market down. So pretty much a fair value gap, obviously, it's a three candlestick expansion. The middle candle does not overlap, blah, blah, blah. We already know this, but what does that actually mean? Imagine you love buying t-shirts. And so let's say this is $45. At $45, you're buying t-shirts and people are selling to you and sometimes they oversell. So it goes down a tiny bit, but then you just buy it back up. And pretty much from $40 to $42 or whatever, there's a seller for every buyer. But imagine at one point it gets to, let's say, $41, and all of a sudden there are no sellers, guys, right? You cannot find a t-shirt to buy because no one wants to sell it. And you can't find a seller that is willing to sell you a t-shirt that you want to buy until price goes all the way up to $47. So at that point, you buy a t-shirt, and then the next t-shirt that you have to buy, it's $47. And so that right there is a fair value gap. The $42 to the $47 is a fair value gap because there are no sellers. You want to buy a t-shirt, but you're unable to do so at a certain price range because there's no sellers. If you see a bullish fair value gap, that means that there are no sell orders in that area. So what does that tell us? It means that for whatever reason, the sellers of this particular good, they don't have sell orders in a particular area. So a lot of the times what we can anticipate is if price goes back into that area, sellers won't have orders placed. I traded at a corporation for a while, and something that I can tell you guys is not only do buyers respect bullish fair value gaps, but sellers do too. A lot of the times, if you're a seller, you don't want to, put a sell in a bullish fair value gap because it kind of scares them. And it scares them because they think that a lot of people anticipate the bullish fair value gap to hold. And because it's true, right? Regardless of the bias, regardless of anything, fair value gaps hold more often than inverse fair value gaps are created. You can backtest what I just said. It's completely true, but that's just pure probability. But the point of this video is to simply remind traders who are already trading and making money that a fair value gap, it's not a candlestick formation, whatever on a chart. This is buyers or sellers dominating a specific area, a specific price range in a particular good. Another thing is, as a corporate trader, people actually look at this PD array. There's a lot of things that I've seen online that people talk about PD arrays that corporations and institutions, they do not care about, but they do care about fair value gaps because both sides of the equation, buyers and sellers, have to, sort of respect a fair value gap. And that's all what a fair value gap is. If you have one takeaway from this video, I just want you to remember that this isn't only a three candle formation on a chart. Remember what's actually going on behind the charts. Remember that for whatever reason, both institutions and retail traders do not want to sell or buy within a specific area. Always remember that, don't only look at the chart. That's what I'm trying to say. It's helped me and I've been trading forever. Anyways, take care. Hope this helps you guys. Peace.